Hey everybody, what's going on? This is Carey Trades. I just wanted to take a minute to kind of go over the Golden Goose indicator that I helped program for the boys over at Caney Capital. I'm not going to go too far into what Coach Dipka's Golden Goose strategy is, just because there are better videos by him to kind of explain all of that. This is really just kind of a visual aid intended to help teach those who are fairly new to some of these concepts that make up the strategy, and for those who are familiar with them, just to kind of help isolate and identify signals a little bit easier without, taking up too much of your free TradingView capital. So this isn't how the indicator loads up by default, but the indicator itself isn't meant to be kind of an everything on at all times kind of indicator anyways. But for kind of the sake of breaking down this by its parts, I kind of wanted to start off here with a fairly fundamental view. So for those who aren't immediately familiar with what the Golden Goose strategy is, it utilizes moving averages as well as what are called Fibonacci levels to help identify high confidence entries, as well as provide signals for environments that have a fair amount of confluence. So kind of the intention is that the criteria that go into determining what a Golden Goose signal is something that inherently has a fair amount of confidence and support into the trade, and then you can kind of use some of your other information that you know about the market to determine where and when or whether or not to make an entry at all. So if you're new and a lot of that sounded kind of like gibberish, that's fine. I'll try to kind of go over things in a way that is digestible, that you can at least understand a little bit more of what that means by the end of this video. So to start off, one of the critical elements of the Golden Goose strategy is that in order to help identify direction of trend, you need to have a crossover of moving averages. So this cloud right here is going to change color depending upon the direction of the trend. And this is made, really the whole outline of these clouds is traced out by the moving averages underneath. I have options inside of here that allow me to turn off the actual moving averages themselves to help minimize distractions, but still maintain kind of the relevant space between them to help identify trends. So to kind of show you what's going on, I'm going to turn on these two moving averages. So the strategy calls for using the 9 and the 21 EMA. Personally, and this is purely a thing that I like to do, it's really truly semantical at this point, but I like to use the 8 EMA versus the 9 EMA exclusively for the reason that all of my numbers at that point become fib numbers. 8 is a fib number, 21 is a fib number, 55 is a fib number, and 233 is a fib number. We can discuss why that's relevant or significant another time, but I just wanted to put that on there. Technically, it's the 9 and the 21, which is why that's the default. I just like to personally use the 8. Oh, here's a typo. I need to get this out of there because this is more than just EMAs. This is a simple moving average you can use. There's a whole moving average you can use. And you can mix and match. It doesn't have to be the same. Volume weighted moving average, which is something I really like. So I really wanted to give you guys flexibility and accessibility in this. But I have kind of what the standard Coach Dipka settings would be. So for the sake of going over some more of this too, I'm going to hide this cloud for a second, just for the purpose of showing you that also in here is going to be a slower moving average and what I refer to as a trend moving average. Usually something like a 200 moving average is used to determine whether or not we are in an up or a downtrend. And so, for those of you who like to use these elements as additional levels of support and resistance, confluence, confirmation, whatever, I wanted to make them accessible. And again, you have all of these wonderful, amazing options. I'm not going to check this box yet because I'm going to save that for the end when you kind of understand. Also, personally, I love VWAP, volume weighted average price. It helps me understand the conviction in a move, if you will. VWAP, if it isn't moving with the direction of the price action, there's not enough volume to really support the average moving all that much. So when you look at this price action from the end of last week, you see we got all this crazy chop that if you kind of weren't on your toes, it absolutely destroyed you. But you can see how the VWAP stayed pretty steady throughout the day. So if you were watching this when you saw, ES, SPY, MES, whatever it is, whatever iteration of the S&P index you're looking at, when you saw it move up away from VWAP, that could have been kind of like a confirmation that we were probably going to come back and retest it. But we don't need to go into VWAP strategy. What makes this one unique is that you can adjust your anchor period by the week, by the month. Normally VWAP is just an intraday indicator. And so to have these things that are anchored at different points is really kind of a unique and powerful tool to be able to have, and gives you a macro perspective of where this price action lies in the overall trend. And again, because VWAP gets kind of weird once you get above the daily, right? You can see it's kind of relatively worthless information on this macro scale. So there's an option to turn it off, but only on this higher time frame. Once we hit something like a 4-hour chart or lower, we get the VWAP right back. So again, this is just kind of a powerful and useful tool to have. It gives you good information accessible very quickly. So now I'm going to move on to kind of the next part where we get into the Fibonacci levels. So we'll turn these on, and again, you kind of have a whole myriad of things here that I want to get into. So for those who are not super familiar with what fib levels are, the Fibonacci sequence, and part of why I like leaning into it, is it's a natural repeating pattern in nature. And so understanding that the market is controlled by algorithms and computers who, one, have to be able to dictate reliable price action within the code itself, but two, can't be so obvious that it's blatant manipulation. The fibs become a natural way to kind of program in a natural price action behavior argument that kind of protects the market makers. So fib levels become really, really relevant on a lot of respects in the market, I found. And so this indicator is going to auto plot some for you and give you a lot of flexibility within that too. So what automatically comes up first is this fixed Fibonacci, right? And the time frame that you set it on is going to give you the fibs from that time frame, right? So we're on the 4-hour right now. Got the daily time frame marked. And so these are 4-hour bars, but it's still the high and low of that whole day. So we can kind of see how things really played out. I can flip this to the weekly, and you see, it's consistent across the course of the week. And man, do those levels really work well sometimes. So you can go all the way down to the 1 minute, which if I showed you on this time frame would just look like a mess, all the way up to the 1 year fib. So not only that, within the fixed fibs, you can also do this enable custom fib levels. And I thought this was significant and relevant and necessary because there can be and will be times where you will want to have a fib that is relevant within the context of this script based on kind of how the indicator triggers, but it's not necessarily something you can get just from the daily or the 4 hour. These are all in minutes, by the way. It's a thing about TradingView. So and I'm going to zoom out real quick a little bit. If I wanted to draw the fib from this high down to this low, right here, what would that be? 45.16, 40.60.8. Right, so I'm just going to do this for you guys to show you what happens. So we enable these custom fib levels. 45.16 and 40.60.8. So we've got this high to this low. And so now I can zoom back in on my more micro time frame, and all those relevant fib levels are there for my intraday trading. And sure enough, they've proven to be relevant and significant levels. So I thought it was important and useful to be able to override this fixed Fibonacci time frame with this custom fib level option. And so, you're going to have your start and your end. And so going higher to lower is going to give you the bearish fib, where, if these values were inverse, you'd get the bullish fib. Cool. So now I'm going to step over to the dynamic fib, which isn't going to look all that much different. The colors for the fibs are all here, along with the levels and what you can kind of turn on and off. All right, so that'll turn on and off as I do this. That one. Come on. Yeah, see? The reason I have them all the same, because you can turn them on at the same time, and this kind of looks like a bit of a mess, but the dynamic fibs have a thicker line to be able to discern them. You can even come in here and really over-exaggerate it if you want to make it obvious. But the idea is that as you get fib levels lining up, you start to get confluence. And by keeping the colors the same, there's a relative level of continuity between them. So, for example, I know that this red line is a 618 fib on each respective one. And so I can kind of see how maybe price action could bounce between, right? I think we even see it really well here. We get the 786 fib on both the daily and the weekly. Actually, that's from the custom fib levels that we drew. Right? And so here you can even see two different fib levels overlap, right? So you get confluence when these things line up, which is one of the important elements of the Golden Goose strat in general. I also wanted to include this reverse button. Reason being is I think it is useful and helpful to be able to hit a button and your fibs reverse, especially when you've got these extended range fibs. And because sometimes you just want the perspective of the other side. Your bull fibs, your bear fibs, they are a little bit different, and so that reverse button I thought would be really useful and helpful. But so back to the dynamic fibs. The dynamic fibs are going to be different in that you will never get something outside of the range. And what I mean by that is these extended fibs beyond 0 or 1, positive or negative, are going to be moot because the intention of this is to adjust with the upper and lower extrema as price action moves throughout it day to day, or throughout intraday, right? So, it's obviously in hindsight you can't really tell, but when this day started, we would have had this high level over here and the low level here. And then once it broke down below, the low level came down here and has stayed there since because we've moved up. And so as the price action traded above the high of this candle, this high fib came up as well. So these intraday fibs that are dynamic can be really useful as well, especially as you drill down onto lower and lower time frames. And so I thought that was a useful element to have in here. So now on to kind of like the final putting it all together. So we've got these fibs. And one thing that's worth noting is the alerts are only based off of the fixed fibs, not the dynamic fibs. This is for you and understanding how price action will get adjusted throughout the day and have some kind of dynamic levels that you can, maybe identify as pullback entries. But this dynamic fib is not intended to be utilized for identifying golden goose crossover points. I want to make that just obvious because some of y'all might wonder why. But yeah, the fixed fibs and the custom fibs will give you the golden goose alerts. So the way the golden goose alerts are intended, I'm going to show this crossover cloud. You have a couple of relevant signals that come along with these golden goose alerts and triggers. So you have the fast moving average crossing above what I refer to as the medium moving average, and that sets your trend direction. But the golden goose trigger is when this medium moving average, this yellow line here in this case, crosses over a fib. And so this right here is where our goose signal would be. And now that's not immediately an entry. What that tells you is, hey, we can look for a pullback entry to go long here. And so these moving average levels and these fib levels then become potential areas for pullback entries. You can target the fast moving average, you can target your medium moving average, or you can target your fib level as your pullback entries. Now, you won't always get pullbacks. Sometimes, kind of like right here, you'll just, I guess this isn't a great example, but you'll trigger and then you'll just kind of keep moving down, in the, or if it was a bullish trigger, you'd keep moving up, you keep moving in kind of the direction. So just because you get a signal doesn't mean you're going to get a pullback entry. The idea is to help identify high confidence entry points. And so personally, getting the golden goose signal here on this candle and looking to enter on the next candle, I could potentially put limit orders a number of places to kind of help ensure that I get filled. So if I wanted to place limit orders, I could put them here at the fast moving average. I could have put one here at the medium moving average. I could put one here at the fib level, or if I wanted to make sure I absolutely got in, I could put one just above the high of this candle that we got the golden goose signal on. So now that I've talked about that enough, I'm actually just going to show you how these signals populate, right? And so it looks like we triggered a little bit late here on this one. Sometimes what ends up happening is the cross occurs in like such a momentary, immediate spot that the algo can't quite confirm it. It's something I'm trying to work out, but that's why you're relying more on your eyes and not the actual. Come on, man! Don't enter a position because a goose emoji showed up on your trading view screen. Don't be silly. Come on, that's like listening to someone who pretends to be Jim Carrey for financial advice. Don't be ridiculous. Anyways, this can help identify these high confidence and high probability entries. And what happens is we take this long. So whether we trigger here at the fast moving average, or if we triggered above, right? Because we were using our eyes, we weren't just relying on this little guy to pop up, but we saw it here. We got confirmation when it popped up. If you're saying, oh, that's a goose, and then the next candle you get a goose, then you're in, right? Kind of over here, right? We see the cross occurs between these two candles. And so on this time frame, the alert is going to show up here, right? When I drill down into a lower time frame, we'll get a more precise entry, but even here the same thing happens. So again, over here we get something that works a little bit nicer too. So this can be really helpful in multiple time frame analysis and understanding where you're getting in with all of that. So you can see how these fib levels, after behaving as signal levels for the golden goose strategy to identify favorable entries, then also behave as targets to take your profits. There's a number of different ways you can trail this and protect yourself and minimize your losses. And I think that's one of the really cool things about this strategy too, is if you are diligent with your entries and don't just slap the ass as soon as this goose pops up, you can really have some high confidence entries on your positions. So how from here you can kind of use it is up to you. It's really just kind of a matter of, do you want to have this this slow moving average on here, or maybe you find it advantageous to change this to the same as your medium moving average, but you change the style, and so you get kind of a different flavor on things. So this isn't intended to be in everything on at all times. Also, if you don't like the color crossover change for whatever reason, you could turn this off. It flips to yellow, which I felt was kind of like a neutral color. If you are like, dude, moving averages are silly, give me the VWAP. It's right here for you, and it's flexible. It's flexible. So that is really it. That's how you utilize this Gooseinator indicator that I've built out. That's kind of my vision for it. Obviously, I'm still kind of digging into some of the code and tweaking bugs that I find here and there. But I hope you guys get a kick out of this and find it helpful and find that it adds value to your day-to-day trading. If you guys have any questions, you can find me on Twitter at CarryTrades. I help moderate the Keanu Trades Discord, so if you're in there, you can always give me a shout. Of course, I'm hanging out with the homies in Kane Capital with this, so you can find me in there. Feel free to ask questions. This really is for you guys. I wanted to give back. Coach has taught me a lot, and had he not, spent 45 minutes in the video that he made for you guys, kind of going over this strategy and how powerful it can be, I never would have been in a position to even kind of put this together. So very, very thankful for those folks, and I just wanted to give back to them. So also, at least for the time being, because technically this TradingView account that the scripts are published under is fairly new, there are restrictions on the indicator being public. So when you come into indicators, you can't search Golden Goose and have it pop up. I mean, it will for me because it's my script, but it's not going to pop up because it's not publicly available yet. You got to go through the link, which I'll have with this video as well, but it's all over my Twitter. It's in the King Capital Discord. It's in the Keanu Trades Discord. You can DM me for it. My DMs are open. But yeah, I hope you guys found this useful. And until next time, stay green, my friends.